Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Coinbase Global Inc. Annual Report. Coinbase Global Inc. offers a wide range of services to cater to various needs of its customers. At the consumer level, the company provides a primary financial account that enables individuals to manage their crypto assets seamlessly. This platform allows users to buy, sell, and store cryptocurrencies with ease. In addition to catering to individual consumers, Coinbase also extends its services to institutional clients through its brokerage platform. This platform offers a pool of liquidity across the crypto marketplace, providing institutions with access to a vast array of trading opportunities. The company's suite of products further empowers developers by granting them access to build on-chain, allowing them to create innovative applications and solutions. Overall, Coinbase Global Inc.'s diverse range of services has established it as a leading player in the crypto economy. By providing a comprehensive platform for consumers, institutions, and developers alike, the company continues to drive growth and innovation in the industry. The significant stock price drop of over 40% for Coinbase Global Inc. Coin in the past year can be attributed to several key news events and market factors. Regulatory pressures and legislative concerns played a major role in the decline. The proposed Clarity Act, aimed at clarifying the jurisdiction of regulatory bodies over digital assets, posed a significant threat to Coinbase's offerings, particularly its yield-generating products on stablecoins. This led to increased lobbying efforts by Coinbase CEO Brian Armstrong, but ultimately resulted in investor apprehension. Analyst downgrades and valuation concerns also contributed to the decline. Several firms, including Argus Research and Monness Crespi, downgraded Coinbase from buy to hold or sell, citing stretched valuations and market volatility. J.P. Morgan lowered its price target for Coinbase from $399 to $290, further impacting sentiment. The broader macroeconomic environment also played a role in the decline. External shocks such as new U.S. tariffs on Chinese goods led to a sharp sell-off in global stock markets and risk assets, including cryptocurrencies and crypto-related stocks like Coinbase. Lastly, lower-than-expected financial performance contributed to investor apprehension. A 9% decrease in spot trading volumes amidst heightened market volatility, along with a substantial year-over-year drop in profit per share, raised concerns about Coinbase's ability to maintain its revenue streams. Coinbase Global Inc. maintains a market capitalization of $38 billion, broadly in line with the industry peer group. Coinbase Global Inc. trades at a higher price-to-earnings ratio of 32 times and a lower price-to-book ratio of 2.37 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. As this company belongs to the financial data and stock exchanges industry, the liability ratio is less meaningful for valuation. Investors should instead focus on return on assets, ROA, and return on equity, ROE, to better assess the company's intrinsic value. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for Coinbase Global Inc. can be identified through an analysis of its financial data. On the revenue growth side, transaction revenue saw a significant increase of 74.5% from 2023 to 2024, followed by a modest decrease of 0.2% in 2025. Subscription and services revenue also experienced substantial growth, increasing by 108.1% from 2023 to 2024, and further rising by 23.6% in 2025. In contrast, stablecoin revenue saw a decline of 31.7% from 2024 to 2025, while blockchain rewards decreased by 4%. These declines highlight the importance of managing and diversifying revenue streams to mitigate potential losses. On the expense side, technology and development expenses fluctuated between periods, with an increase in 2023-2024 and a decrease in 2024-2025. The interest income earned on corporate cash and cash equivalents also saw a significant increase due to hypothetical changes in interest rates. This highlights the importance of managing cash reserves effectively to maximize returns. Overall, these drivers provide valuable insights into the key factors influencing Coinbase Global Inc.'s revenue growth and decline, enabling informed decision-making and strategic planning. The company's net income experienced a significant fluctuation between 2023 and 2025. In 2023, it saw a substantial increase of 1,230% from $94,871 to $2.579 billion in 2024. However, this growth was short-lived, as the net income decreased by 51% in 2025 to $1.26 billion. The profit margins also underwent a notable change during this period. The company's profit margin decreased significantly from 39.2% in 2024 to 17.6% in 2025. This decline can be attributed to the substantial decrease in net income and an increase in expenses. Several factors contributed to these changes. The uncertainty surrounding future interest rate decreases had a potential impact on subscription and services revenue, which may have affected the company's financial performance. Additionally, the restructuring efforts initiated in January 2023 likely played a role in the significant decrease in net income in 2023. The analysis of the company's financial performance reveals a consistent trend of generating positive operating cash flow. According to the extracted summaries, the company has consistently produced positive operating cash flow in all 3 years, 2023, 2024, and 2025. This is further supported by the information on page 138, which explicitly states that operating cash flow is positive. The data also indicates a significant increase in net cash provided by operating activities, with a notable figure of $4,419,000 in 2025. Furthermore, the net change in cash and cash equivalents shows a substantial increase of $7,577,186,000, demonstrating the company's ability to generate strong operating cash flow. In conclusion, based on the available information, it is clear that the company is indeed generating positive operating cash flow, which is a crucial indicator of its financial health and stability. The company's debt level has undergone significant changes over the past year. Long-term debt has seen a substantial increase of $1.5 billion with the issuance of 2029 convertible notes, bringing the total to $5,937,034. Additionally, short-term borrowings have increased by $77,837, representing a 20.6% rise. Total liabilities have also risen by $2,613,665, from $12,265,109 to $14,878,774. In terms of interest expenses, there has been a slight increase. Interest expense rose by $4.768 million, 6%, from 2024 to 2025. Furthermore, the weighted average annual fees on short-term borrowings increased from 2.7% to 3.5%, which likely contributed to higher interest expenses. Overall, while debt levels have surged, interest expenses have only seen a modest increase. Coinbase's management is emphasizing the importance of regulatory compliance in their company outlook and strategy. They acknowledge various risks associated with market fluctuations, interest rates, and foreign currency exchange rate changes. To mitigate these risks, they aim to preserve capital and meet liquidity requirements without increasing risk. In terms of growth-oriented initiatives, Coinbase is expanding its sales and marketing activities, introducing new subscription products and services, and investing in Bitcoin. They are also integrating USDC across their products and enhancing customer service functions. These efforts demonstrate the company's commitment to innovation and customer satisfaction. Management's focus on regulatory compliance and risk management suggests a cautious approach to growth, prioritizing financial stability over rapid expansion. This strategy is likely driven by the evolving tax regulations related to crypto assets, which require significant judgments and may have unforeseen effects on the company's financial condition and results of operations. Overall, Coinbase's management appears to be taking a balanced approach to growth, emphasizing both short-term stability and long-term potential. The company has made several strategic moves through acquisitions and divestitures to shape its business landscape. In terms of acquisitions, the company has purchased Centilla BV, a significant move that is mentioned on page 4 of the document. Additionally, Deribit was acquired by the company, with references to this transaction found on pages 89 and 135. On the other hand, the company has also divested certain assets to optimize its portfolio. One notable example is Coinbase Asset Management, which utilizes third-party custodians, indicating that it is no longer a core asset of the company. Furthermore, the value of Solana decreased by $37 million from an initial valuation of $21.298 billion, suggesting that this asset was divested or written down in value. The company's financial activities have been notable for two key aspects. Firstly, the company has not paid out any dividends to its shareholders. This decision suggests that the company is prioritizing reinvestment in its operations or other strategic initiatives over distributing profits to investors. On the other hand, the company has indeed engaged in share buybacks. This move indicates a confidence in the company's future prospects and a desire to return value to shareholders through alternative means. By purchasing back shares, the company effectively reduces the number of outstanding shares, which can lead to increased earnings per share and potentially boost investor confidence. That concludes the financial summary for Coinbase Global Inc. Feel free to comment below, and I will be happy to answer them when possible.